Hello, everyone. My name is Kevin Drover. I'm the president and CEO of Aurcana Corporation. Aurcana is a silver company. We've been in business for a very long time. We have two assets, both of which are located in the United States. The Shafter mine in Texas and the Revenue Virginius mine located in Colorado. Just briefly bring your attention to the forward-looking statements, some of which I may be making. As I said, we're a silver company. We're in a stable jurisdiction in the United States, Colorado and Texas. We're fully permitted for immediate production. We have a proven management team on board. We're a precious metals mine with base metals credits. We have lead and zinc as the base metal credit and some gold. At the Revenue Virginius mine, it's feasibility completed in 2018, updated again internally in June of this year. We're low cost of production. We're approximately $8 an ounce, all in sustaining costs as per our feasibility study. Very strong cash flow. The feasibility study was completed at $18.50. And of course, as many of you know, we're currently at right around $27, which this thing just becomes a cash printing machine. We have a mine, a tremendous amount of infrastructure already in place. The mill is there, fully built, roads to it, power to it, you name it, we've got it. We don't need anything to go to production. And we have significant upside potential in the current reserves. The management team, myself, Brian Briggs, Mike Lee, all been in the business a very long time. Combined, we have 150 years of mining experience. Buck Andrews is our CFO. He's located in Colorado. Donna Maroney, who's located in Vancouver, is our corporate secretary. Just to bring your attention to some of the comparables out there we have with our peers, you know, the M&I grade to the left, and the top left, we're one of the highest grade mines, certainly with M&I and proven and probable in the world, probably. All-in sustaining costs, as I said, converting the base metal credits to silver, we're at $10.71 an ounce. So we're in a very respectable place in our cost profile, in our grade, and in our production. The mine is located, and this is the flagship. We have the second mine in Texas. It's at a PEA level. It was in production previously, but this is our focus. The Revenue Virginius mine is absolutely our focus. It's about a 7-hour drive southwest of Denver, easy to get to. The feasibility study that was completed, these are the numbers here, 21 million ounces of proven and probable reserves. We're going to produce about 3.1 million ounces a year with much opportunity for us to get higher than that. The feasibility, as I said, was done at $18.50, and we've got an NPV of 75 million at a 71% IRR. That, of course, changes significantly with the higher prices. Just a little bit of a picture, give you an idea of what we look like. The mill itself is located underground. We're up fairly high, so it is avalanche country. So we're not in harm's way of anything. Very small footprint. We have a passive water treatment system that should just operate perpetually without any problems. Tailings is dry stack tailings, best available technology, and so on. A couple of pictures just to give you an idea. We have about 50 men, women working on the site right now. We are driving raises. We're using Alamec raise climbers and doing all the things we need to do to advance the project toward production. We've not made a production decision yet, but we hope to do that very soon. A couple of pictures of the mill itself. It's a flotation mill. As I said, its capacity is greater than 400 tons a day. We're going to be starting up at about 270 tons a day. We want to make sure we establish our production profile, our metallurgy, our cost profile, and so on. We expect to get that done within the first year of operation, and then we would intend to bring on some additional stopes and move that tonnage up closer to 400 tons a day. And of course, as you do that, the metal produced will go up as well. So we would hope to be closer to 5 million ounces going into the second year. The region that we're in is very, very prolific mining area. It's there's been thousands of mines in the San Juans over the years, last couple of hundred years. Some of them ran for well over 100 years. The Idorado mine ran for well over 100 years. The Sunshine mine ran for over 100 years. We're the only permitted mine with a mill operation in the San Juan Mountains right now. So we have opportunity to consolidate if we see something that's interesting. And there is a lot of opportunity in this region. From an exploration perspective, we have a lot of upside. Our Virginius vein, which is the main vein that we're talking about here, and it's this vein right here, if you can see my cursor. Our existing operation is basically just on this much of that Virginius vein, which is about, I think, 4,000 feet out of about 20,000 feet of strike length. We just completed a drill program this summer in July on the newly acquired Bluegrass Claim, and we're hoping to have assays from that fairly soon, and we will be announcing those. We have tremendous exploration potential out on this side, and also we can trace the vein on surface the full length of the claims that we own, so we know the vein is there, and we expect over the years that we will be mining on the Virginius vein for quite a long time. Here is what we're considering in terms of, probably not right away. Our idea is to get this thing up and running as quickly as we can and get into production and get self-sufficient in cash flow. But longer term, we're going to look to go out on this side right here. We have all the old assays from the fringes right here. So we know that the vein goes all the way out this way. So we looked at it in phases. I think this is about $3.5 million per phase. It would bring in about 6-7 million ounces per phase, we believe. So we see us, getting 20-25 million ounces in this area right here. And some of the grades that we've seen are just unbelievably high grade silver. This is the Bluegrass Claim. As I said, we did some exploration here this year. We hope to have assays back fairly soon. Currently, we're going to be mining up here when we start up. We're driving raises up right now to access these various areas here. This area, which is the 1500 level and is not in the mine plan, as we go by here, we're certainly going to be sampling this, and we expect that this will come into the mine plan and add a year or two to our reserves, as well as will this area down in the bottom once we get down here. This will be in probably year 3 or 4. So a lot of exploration potential here, and we would expect to be in business a very long time. Recently, we've raised some money. We're moving toward a production decision. We've not made that yet. We're still finalizing our debt facility to bring the mine back into production. But we have ordered our long lead time items and placed the orders for equipment that's long lead time, flotation, pan feeder for the mill itself. We've let the contract for the rehabilitation of the emergency escapeway. All that is into work right now. We're working on the infrastructure for the rail yard, for the reagent facility, the expansion of mine offices. This is all weather sensitive material that we're currently in the process of working on that. Waste dump. We have to be able to handle some waste coming out of the mine, so we've pretty much finished the waste dump wall reconstruction, the automatic dumping of the cars as they come out, and so on. We've pretty much completed the expansion of the passive water treatment, so that we're ready for that in the spring this coming year. And we've started the access to and development of the winter dry stack tailings storage facility. We have 2 areas, one for summer tailings and one for winter tailings. And the only difference between the two is the summer tailings are in a bit of an avalanche area. It's not a problem for the tailings, it's a problem for people. So we decided to put another, what we call winter stack tailings storage facility to one side. And we'll complete all of these activities later this fall. So in terms of production growth, as I said earlier, you know, we've got many resources that we can organically grow, and it's a matter really of bringing on the additional stopes and so on. So we expect to see silver production ramping up over the first, second, and third years. The district consolidation opportunity, absolutely available to us. We've already acquired the Bluegrass Claim, so that's a benefit for us. And as I said, we already did a drill program there, so there are opportunities there. Camp Bird, Ruby Trust Mine, but they're not going anywhere just yet, so we've got some time. So in summary, we're fully permitted for production. We're in a very stable jurisdiction. Colorado and Texas have proved to be very good places to work. We have a seasoned management team on board as we speak right now. All the technical team, all the management team, and accounting team is at the mine site and working there. We have significant near-term opportunities with vein extensions and underground development and so on. The current market conditions are excellent. The price of silver is in our favor at this point in time. We are debt-free. We've got an excellent share structure, very supportive shareholder base, and we're poised and ready to go to production. So with that, I will end my presentation. Thank you very much